Hey guys, and welcome to episode 2, where we'll be covering source documents. So, what is a source document? Source documents are effectively proof of a transaction. So when a purchase or sale is agreed, or money is handed into or taken out of the bank account, the source document is provided to state that this has actually happened. The financial accounting system states that when a transaction occurs, first of all, source documents must be created and passed over from the seller or bank to the customer. Second of all, the transaction must be recorded in the subsidiary books. Third, the transaction must be recorded in a double entry format in the ledger accounts. Fourth of all, a control account should be produced to check that everything has been added and to provide totals of all the ledgers, making it easier to prepare a trial balance. Fifth, a trial balance must be completed to ensure that both the debit balances and credit balances of all the accounts are totaled up and equal to each other. Sixth, the final accounts, which are the income statement and balance sheet, must be produced to show the profit for the year, the net profit, and the net assets or capital. So typically, the first question in a Unit 1 exam is about source documents and subsidiary books. So I'm going to be talking about the different types of source document and show you a couple of examples of questions about this. So, there are 7 different source documents that you are required to know, and 2 of them are split up into sales and purchases. The first source document is an invoice. This is provided from a seller to a buyer as confirmation that there has been a purchase on credit. If you don't understand what credit is, check the last episode out where I explain some important terms. The invoice can either be a sales invoice or a purchase invoice, and it is important to state which one it is in the question. If I have agreed to sell a product at £500 on credit to Dave Limited, I must issue an invoice as a bill to effectively say, Dave Limited owes me £500. As I am the seller, to me, it is a sales invoice. Whereas, if I buy a product from Francis Limited for £200 on credit, I would receive a purchase invoice from Francis Limited for £200. Next is a credit note. A credit note is issued when somebody returns the goods that they bought as they don't want this product anymore. If you've purchased goods and want to return them back to where they came from, so let's say Jeff Limited, Jeff would issue you a purchase credit note as you have returned your purchases. However, if you sold goods to Mohammed Limited and he returned his goods to you, you would issue a sales credit note as it is your sales that have been returned to you. It is very important to note that the names of these source documents are in your perspective, as that is all that we have to worry about. If we sold it, we issued a sales invoice. If we bought it, we receive a purchase invoice. If someone returns the goods we sold, it's a sales credit note. If we return the goods that we bought, it's a purchaser's credit note. Note that you should always view it from your own perspective. Cash receipts are another form of source document that are simply handed over when somebody pays cash on delivery. This typically does not come up as an answer to a question, but it is a simple transaction of when someone pays cash upon the delivery of a good. Till rolls are a more common form now of source document than cash receipts and are typically issued when you buy from a store, for example in Tesco. You use your card to pay for something and that receipt comes out of the machine, that is a till roll. A bank paying in-slip counterfoil is issued when you deposit your cash into your bank account. For example, you would like to store your cash at hand in your bank account. So you go to the bank, make a deposit and receive a bank paying in-slip as a result. Check counterfoils are used for when you are handing over a check to someone else, so they then go and cash that in. So a check counterfoil is what you are left with after you sign off a check to somebody. And this means that their bank account will obviously increase from the money that you give to them. The check counterfoil shows how much you paid and who you paid it to, making it important for businesses that use checks. Bank statements are relevant for businesses who work with credit transfers, which is when a buyer typically orders the bank to transfer the money directly to the seller, not by check. And this can be done, for example, via mobile phone or even online. If the words credit transfer are in the question, this immediately indicates that the bank statement is the relevant source document. Important note is that the questions will always start with a name. This is who you are in the question. So I'm going to put an example on the screen, and the first name is Richie Skipper. This means that you are Richie Skipper in this question. Make sure to remember that. So, as we've now learned the source documents, you should hopefully be able to complete half of this question that should be on the screen. Pause the video and have a go at answering without looking at any notes that you may have made. If you're still unable to work it out, check your notes or go back and listen to try and help you determine which one is which. I'm going to leave you for a few seconds now. And I'm back. Hopefully you had a go and you were confident in your answers. The source document for item 1 now is a sales invoice. We are Richie Skipper and we sold something on credit, which is when we agree that a payment will be made at a later date. So we must issue a sales invoice to let the customer know that they owe us £195. The second item is a sales credit note, because the fact that a customer is returning a good means that we originally made the sale. Therefore, we issued a sales credit note. The purchase of a freezer on credit. This will be a purchase invoice, as the transaction was a credit one and we made the purchase. So it's time for a second question now, to get some of the ones that weren't in the last question into practice now. So in a minute I'll ask you to pause and have a go at this question on source documents and see how it goes. So you may pause it now and let's go again. So what you should have identified is that we are James Fay, because that's the first name mentioned in the question. We purchase goods on credit, and therefore number 1 is a purchase invoice. For number 2, we then sold goods on credit, and it is therefore a sales invoice. For the third one, this is one that we haven't done yet, we paid our cash into the bank. So this is one that is identified as a paying in slip. So well done if you got that one correct. 4, we are James Fay. Tom returned his goods to us. Therefore, we originally made the sale again, making it a sales credit note. The fifth one is one that will be present in the bank statement, because if you remember, I said that if it mentions a credit transfer, it instantly means that it is identified in the bank statement. So if you got all of those correct, congratulations. If not, go back, have another go at some different questions if you can. It's how you learn. That's the end of the video for source documents. I now hope you have a greater understanding of how to answer questions on it. And the next topic will be subsidiary books. So thank you for watching. Please like, subscribe and comment any questions that you have. I'll be more than happy to help.